Target 8.10. Strengthen the capacity of domestic financial institutions to encourage and expand access to banking, insurance and financial services for all. Indicator 8.10.1. A. Number of banks per 100,000 adults, and B. Number of automated teller machines per 100,000 adults. Access to finance has continued to rise across the world since 2015, while new modes of financial access have gained relevance, growing even more rapidly since the outbreak of the COVID-19 pandemic. Globally, the number of ATMs per 100,000 adults has hardly changed between 2015 and 2021, at about 64.9 in 2015 and 64.4 in 2021. Though significant regional differences are observed. The fastest growth was observed in Central Asia and Southern Asia with an annual growth rate of 4%, while Western Asia and Northern Africa also experienced a modest increase. In the least developed countries and landlocked developing countries, the number of ATMs per 100,000 adults grew annually by more than 5% between 2015 and 2021. On the other hand, this indicator decreased in Oceania and Sub-Saharan Africa and remained broadly stable in Eastern Asia and Southern Europe, Latin America and the Caribbean. The growth of commercial branches per 100,000 adults worldwide has seen a slight reversal in 2021 relative to its level in 2015, declining from 15.1 to 14 during this period. This is as a result of the decreasing trend in bank branches in advanced economies to reduce costs and the move towards the adoption of digital financial services such as mobile and internet banking. North America and Europe and Oceania experienced the largest decline in bank branches between 2015 and 2021, with negative annual growth of about 3%, while Latin America and the Caribbean and Western Asia and Northern Africa also observed a fall. The levels in Eastern Asia, Southeastern Asia and Sub-Saharan Africa have remained broadly stable over the past 5 years. In contrast, however, landlocked developing countries experienced the fastest annual growth of 6% between 2015 and 2021. The COVID-19 pandemic seems to have reinforced the use of digital modes of financial access further, while more traditional modes of accessing finance captured by the two indicators declined globally and in most regions from 2019 to 2021. The second indicator here, 8.10.2, proportion of adults 15 years and older with an account at a bank or other financial institution or with a mobile money service provider. The accelerated adoption of digital solutions, in part as a result of the COVID-19 pandemic, is transforming access to finance. In 2021, around 76% of people worldwide have an account either at a bank or similarly regulated deposit-taking financial institution, including a mobile money service provider. Yet a regional or economy-level view of account ownership shows wide variation. The data shows significant differences in account ownership rates across economies in the same income group. For example, among low-income economies, account ownership varies from 6% in South Sudan to 66% in Uganda. Among high-income economies, Uruguay has the lowest account ownership at 74%, and 10 high-income economies have 100% account ownership. Thailand boasts the highest account ownership rate among upper-middle-income economies at 96%, and in lower-middle economies, account ownership ranges from 21% in Pakistan to 98% in Mongolia. From 2011 to 2017, financial inclusion efforts were driven by scale as governments in large population economies like India, a lower middle income economy, and China, an upper middle income economy, enacted policies specifically to increase account access. Between 2017 and 2021, however, the global trend shifted towards broader scope, such that 34 low and middle income economies of different sizes increased their share of adults with a financial account by more than 10 percentage points. Both scale and scope expansion of financial inclusion have been enabled by customer-facing digital technology and is transforming access to finance. Let's look at mobile money, for instance. 10% of adults worldwide had a mobile money account in 2021, up from 4% in 2017. That rises to 13% of adults when we look at only mobile money account ownership in low and middle income economies. Most of these adults have accounts with both a mobile money provider and a financial institution, suggesting that the impact of mobile money, while significant in certain economies, is minimal at global scale. Nonetheless, there are places where mobile money provides a critical service. Examining mobile money adoption across countries by income bracket, we see these digital accounts, which often cost less than the traditional brick and mortar financial institution, playing a significant role in low income economies, and a less significant one on average as countries get richer. Specifically, 27% of adults in low income economies have a mobile money account, 12% have one in middle income economies, and insignificant percentages have one in high income economies.